How to invest like a billionaire. The Warren Buffett secret. Who hasn't heard of Warren Buffett, one of the world's richest people, consistently ranking high on Forbes' list of billionaires? Self-made billionaire Warren Buffett has been called the greatest investor in this time and age. Many people respect Warren Buffett's common sense approach to investing and the continuously rising fortune of Berkshire Hathaway, the holding company for his basket of middle American firms. Buffett purchased a controlling interest in Berkshire Hathaway in 1975. Celebrating the company's 50th anniversary in 2015. This transaction supplied him with a corporate structure that he later transformed into the holding company and conglomerate that almost all investors are aware of. He is widely regarded as one of the most successful investors of all time. We are all familiar with his backstory. He was just 11 years old when he made his first investment in the stock market, and by the time he was 29, he had already accumulated $1 million through his stock trading. He was already in his 60s when he became a billionaire stock investor. Therefore, it should not be surprising that the CEO of Berkshire Hathaway has a great number of following of investors who want to adopt his investment ways in order to follow his footsteps in hopes of becoming the next billionaire. Hi, I hope you enjoyed my previous video and are happy to be back. Welcome back, or if you're just joining us, we are Finance Bureau, your one-stop destination where we talk about anything related to cryptocurrency and personal finances. I'm glad you can make it. For this video, we will deal with the question, how does this billionaire investor Warren Buffett do it? And is it possible for me to do it too? Buffett became wealthy by purchasing stocks at a bargain, or that were no longer in demand, and hanging on to them for a long period of time. It must be simple, right? If this were the case, then everyone would be able to replicate the success that Buffett has had. However, Buffett does have a few secrets that the rest of us average investors might use to improve our investment ability and help us choose great value stocks. So in the most basic sense, Buffett makes investments in excellent businesses that are selling for prices that are lower than their true worth. He then maintains his holdings in these investments for as long as the great businesses remain in existence. It should be no surprise that there's more to the story than that. In this video, we will go a bit further into Buffett's investing strategy, present some real-world instances of how he's executed his investment philosophy, and list the actual companies that he invests in, as well as some that he avoids investing. Let's get right into it, shall we? Here are ways that you can invest like Buffett. You may not have Buffett's expertise, but you can follow his signature investing rules. Because a significant portion of Buffett's investing process is kept confidential, we do not have a good understanding of how he conducts his research on potential investments. However, the following are some of the most significant investment concepts and winning strategies that Warren Buffett has articulated that you may apply in your own investment strategies. So, here are 8 of Warren Buffett's investing philosophy. First is to find some margin of safety. Buffett focuses his investing decisions on the principle of providing himself with a cushion or a margin of safety. A margin of safety, in the simplest words, is a set of features on an investment that reduce the risk of financial loss. If a stock is selling for $10 per share, but the true value of the company's assets is $12 per share, then investors have a $2 margin of safety. The stock price of the firm shouldn't fall too far below its real worth. Buffett's investment philosophy is never overpaying for a company's intrinsic value. A too high purchase price for the stock of an excellent company can undo the effects of a subsequent decade of favorable business development, as he puts it. The next thing is that you should prioritize high quality. When it comes to investing, Warren Buffett stays away from garbage. If a failing company becomes cheap enough, it still won't convince him to purchase it. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price, according to one of the best Buffett advice for rookie investors. Number 3, don't follow the crowd. Buffett tells investors that the most important quality for an investor is temperament, not intellect. You need a temperament that neither derives great pleasure from being with the crowd or against the crowd. crowd. Another bit of Buffett advice that is crucial for new investors, particularly in the era of Reddit forums, is as follows. Don't follow the crowd and invest in a stock just because everyone else is doing it. Likewise, don't try to constantly be a contrarian and sell the stocks that everyone else is purchasing. Investing like Buffett means paying little attention to what other people think and instead focusing on what you think is valuable on your own. Next philosophy is that never be afraid of a market decline or corrections. In theory, it makes sense to buy cheap and sell high when investing in stocks, but our irrational tendencies often lead to the opposite result. When we see our friends succeeding, we feel compelled to follow suit. Also, when the stock market crashes, it's in our tendency to get out while we still can. Buffett embraces discounts on his favorite stocks and says opportunities come infrequently. When it rains gold, put out the bucket, not the thimble. When stock prices fall, it allows Buffett to make discount purchases, and he loves that. Would you freak out and leave if you were shopping at your favorite store and saw a sign announcing that everything in the store was 20% off? Obviously not. Hey there, are you enjoying so far? Or are you learning anything valuable? If you do, please don't forget to hit that like and subscribe button for more of my content. Thanks. Now back to the video. The next one is to have a long-term perspective in making investments. When Buffett buys stocks, he's in it for the long haul. Consider this Warren Buffett investment code. If you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. If there is one quality that you need in order to invest like Warren Buffett, it is patience. He shows incredible patience, waiting for investment opportunities to present themselves. When they do, he takes maximum advantage of them. He doesn't choose stocks based on predictions of price increases over the next few days, months, or even years. When Buffett invests in a company's shares, he intends to eventually become a majority shareholder in that company. Though he does sell stocks occasionally, and for various reasons, he makes most of his investments planning to own them forever. Also, Buffett has said that an S&P 500 index fund or a similar set-it-and-forget-it investment is the most effective investment practice most individuals can make if they cannot adopt a forever mindset with their stock holdings. The sixth philosophy is that if the situation changes, you shouldn't be afraid to sell. When questioned about a loss-making investment he made, Warren Buffett reportedly said, "The most important thing to do if you find yourself in a hole is to stop digging." While he hopes to hold on to each and every stock he purchases forever, he knows that market conditions and expectations might change. A big holding in mortgage provider Freddie Mac was purchased by Buffett a number of decades ago, which may come as a surprise to you. He decided to sell the lender a few years before the financial crisis hit because he saw that its management was beginning to take unnecessary risk with the company's cash. Years later, when the economic crisis came, it was undeniable that Buffett had made the best choice. Next is that it is beneficial for you to learn the basics of value investing. When it comes to value investing, Warren Buffett is universally regarded as the best in the world. Value investing focuses on paying low prices for investments relative to their intrinsic values. The ultimate objective of a value investor is to purchase $100 worth of shares in a company for much less than $100. When making an investment, value investors look for a company's intrinsic value that is much higher than the enterprise value, as indicated by the stock price. Investors who follow Buffett's value investing strategy wager that an undervalued business will witness its stock rate increase in the future as the market realizes its intrinsic worth. Lastly, and most significantly, is the philosophy that the channel has always promoted. You must research and reflect. Buffett is a big believer in continuously learning throughout life. He is known for working long hours at his Omaha, Nebraska office. Investors are sometimes taken aback when they discover he spends the overwhelming majority of his time doing nothing active and will just sit in silence by himself or read. Buffett has said, "I insist on a lot of time being spent almost every day to just sit and think." Warren Buffett attributes much of his success to his lifelong pursuit of knowledge, especially on investing, since he sees it as something that expands over time and pays off well in the end. The next part of the video is discussing the question, which stocks does Warren Buffett invest in? Berkshire Hathaway's stock portfolio is worth hundreds of billions of dollars, with Buffett selecting most of the stocks. While Berkshire has around 45 separate stock interests in its portfolio, over 70% of the portfolio's value is focused on just 4 companies. Here are each of these top investments in greater detail. First is Apple. The stock of the IT powerhouse is by far the biggest investment in Berkshire Hathaway's portfolio. Berkshire holds 5.5% of Apple shares, which was valued at more over $150 billion in late 2021. Buffett admires Apple not just for its sticky consumers — it's difficult to envision a more committed client base — but also for its pricing power and top-tier leadership. The next is the Bank of America. As of late 2021, Berkshire owned 12.6% of Bank of America shares, making it the company's second largest stock holding behind Apple. Buffett reveres Bank of America CEO Brian Moynihan and the rest of the bank's management committee. The company's stock often trades for an implied valuation compared to its assets' book value, which is lower than that of its big bank peers. Bank of America is also a great dividend company that emphasizes share buybacks and has recently risen at one of the highest rates in its peer group. The third one is American Express. One of Berkshire's most significant investments in percentage ownership, the corporation owns 19.1% of American Express shares, worth around $25 billion during this time of rating. Buffett appreciates the company's significant brand name and the fact that it operates as both a payment network and a lender in its operations, which is why American Express stock has been a cornerstone of Berkshire's portfolio for 30 years. Lastly, Coca-Cola. Berkshire Hathaway owns 9.3% of the beverage company shares, worth $22 billion at the time of this rating. Buffett began collecting Coca-Cola stock in the late 1980s, and it has proven to be one of his most profitable long-term investments. Buffett admires Coca-Cola's strength and massive distribution network, both of which offer it a competitive edge over potential competitors. Now, we turn to the stocks Warren Buffett avoids. Buffett evades investments that he does not entirely understand well. That is why Berkshire Hathaway's portfolio lacks numerous high-growth technology businesses or biotech stocks. They aren't inherently poorer companies or overvalued, but Buffett recognizes the strength of his knowledge and stock picking skills and sticks to it. To sum up, just because Buffett stays away from a particular market sector or industry doesn't imply you should too. Just like Buffett, you can invest like a pro by sticking to what you know and understand. Warren Buffett has almost always emphasized that investing in yourself is the best way to ensure your success. This involves making wise financial decisions and learning as much as possible about the areas in which you're most interested in. What have you gathered so far? Is it worth investing like Warren Buffett, or are you going to make an investment strategy of your own? Let me know in the comment section below. If you enjoyed this video, I'd also appreciate it if you hit that like button and subscribe to my YouTube channel to tune in for more financial and crypto content. See you on the next one. Thank you for watching.